Hello and welcome back to Bitcoin Dorks, your go-to source for daily updates on the cryptocurrency markets and important news. Today, we're going to take a look at the recent price movement of Bitcoin in light of the latest US CPI data release. As you may have seen, Bitcoin's price jumped after the release of the CPI data, but the jump was lower than what many experts were predicting. In this video, we're going to explore what this means for the cryptocurrency markets and what we can expect moving forward. First, let's briefly go over what the CPI data is and why it's important. CPI stands for the Consumer Price Index, and it's a measure of the average change in prices over time of goods and services purchased by households. The US government releases this data every month, and it's considered an important economic indicator that can impact various markets, including cryptocurrencies. Now, let's take a closer look at Bitcoin's price movement after the latest CPI data release. On the day of the release, Bitcoin's price jumped from around $56,000 to $58,000, which is a decent increase, but it was lower than what many experts were predicting. Some were expecting Bitcoin to reach $60,000 or even higher after the release, but it fell short of those expectations. So, why did this happen? Well, there could be a few factors at play. For one, Bitcoin has been trading in a range between $50,000 and $60,000 for a while now, so it's possible that the market was already pricing in the CPI data to some extent. Additionally, there may have been some profit taking by traders who were expecting a bigger jump, which could have caused the price to stabilize. Another possible factor is that the CPI data itself wasn't as surprising as some were expecting. While the data did show a higher than expected increase in inflation, it wasn't a huge surprise given the current economic climate. So, it's possible that the market wasn't as reactive to the data as some were anticipating. So, what does this mean for the cryptocurrency markets moving forward? Well, it's hard to say for sure, but it's possible that we could see more stability in Bitcoin's price in the near future. If the market is already priced in the CPI data to some extent, then there may not be as much volatility in the coming days and weeks. However, it's important to remember that the cryptocurrency markets are notoriously unpredictable, and anything could happen. There are a lot of factors at play that could impact Bitcoin's price, including regulatory changes, adoption by institutions, and global economic events. One thing is for sure, though, the cryptocurrency markets are here to stay, and Bitcoin is still the king of the crypto world. Whether the price jumps or stabilizes, there's no denying that Bitcoin and other cryptocurrencies have changed the financial landscape forever. The CPI data is closely watched by economists and investors because it provides insight into the overall health of the economy. Inflation is a key factor that can impact the value of currencies, commodities, and other assets. If inflation rises too quickly, it can erode the value of money and lead to higher prices for goods and services. In the case of Bitcoin, some experts believe that the cryptocurrency can act as a hedge against inflation. Because Bitcoin has a limited supply, some argue that it can hold its value better than traditional currencies in times of economic uncertainty. Additionally, because Bitcoin is decentralized and not tied to any particular government or institution, it's seen by some as a safe haven asset that can provide protection from inflation and other economic risks. So, what does the latest CPI data mean for Bitcoin and other cryptocurrencies? While the data did show a higher than expected increase in inflation, it wasn't a huge surprise given the current economic climate. The US government has been pumping trillions of dollars into the economy to help stimulate growth and recover from the COVID-19 pandemic, which has led to concerns about inflation and other economic risks. However, it's important to note that Bitcoin and other cryptocurrencies are still highly speculative assets that can be impacted by a wide range of factors. While some investors may see Bitcoin as a safe haven asset, others may view it as a highly volatile and risky investment. Additionally, there are still many uncertainties around the regulation and adoption of cryptocurrencies. While some countries and institutions have embraced Bitcoin and other cryptocurrencies, others have been more cautious or outright hostile to their use. This regulatory uncertainty can impact the value of cryptocurrencies and create volatility in the markets. Despite these risks and uncertainties, the cryptocurrency markets have continued to grow and evolve over the years. Bitcoin, in particular, has gone from a niche asset to a mainstream investment that's widely traded and discussed by investors and analysts around the world. Whether Bitcoin will continue to hold its value and provide a hedge against inflation remains to be seen. However, one thing is clear: the cryptocurrency markets are here to stay, and they're likely to play an increasingly important role in the global financial system in the years to come. As always, it's important to approach investments in cryptocurrencies with caution and do your own research before making any decisions. That's all for today's video. Thanks for tuning into Bitcoin Dorks, and we'll see you next time for more updates on the cryptocurrency markets and important news. Don't forget to like and subscribe for more content. And feel free to leave your thoughts in the comments below. Until next time.